Morning's edition of the NPC Markets Morning Call, 19th of September 2025. So overnight we had Intel and Nvidia ink a deal, which drove chip stocks higher. Intel jumped 22%, and Nvidia was up about 3-ish after having a bit of a rough day yesterday, just on the back of those. The Chinese banning the Chinese companies from buying or testing the chips. So overall, we had the Russell after the Fed's rate cut yesterday and signalling that there'll be 2 more 25 basis point cuts for the year. That's obviously very good for the small caps. We had the Russell up there, up 2.5%, NASDAQ up 1%, and S&P up 0.5%. Pretty good week overall. And look, at the moment, market's looking pretty bulletproof, to be honest. So Aussie had a bit of a shocker yesterday. We've lagged all week, despite the fact that, look, gold and silver's been off, but we've had some decent runs in uranium, lithium, and also iron ore's sort of sitting at the top of that range there. So, and considering we are looking at lower rates because of yesterday's jobs number in Australia down, I think 5 or 6,000%. Pretty sad move for the reaction from the Aussie market. Probably expected to recover today. The SPI was up around about 0.5 to 0.6%, and I think we may play a little bit of catch up overall, but we don't tend to be the most bullish of markets in Australia. So as you can see here, Nvidia up 3.5, Google up a little bit. That's at 52-week highs. Intel, as I said, was up 22% or thereabouts. Palantir was up another 5%. The world's most expensive company keeps getting more expensive because they keep winning contracts. An absolute classic case of, where sometimes like expensive isn't expensive if they're getting the revenue. So Trump in the UK at the moment, he had a number of the Mag 7 CEOs there, Sam Altman, Jensen from Nvidia, you had Tim Cook from Apple as well, and they're obviously Nvidia inking that Intel deal. Trump's obviously getting pretty close with Jensen because Intel's really a bit of a basket case, to be honest. We probably prefer AMD in the space, and particularly due to their incumbency in that robotics and automation space. But look, I mean, Trump's in the UK. That deal for Palantir was 920 million. So massive deal yet again. They just keep doing deals with everyone, and basically they've made themselves almost like base systems. If you want to be part of the Allied Forces, you've got to have the Palantir system. And it's become the stickiness for the US government has basically forced stickiness onto other governments as well. So a lot of little intertwined deals happening at the moment. And look, credit to Trump, because they do, if they want to take back this chip and AI thematic in terms of national security and in terms of looking after the economy for decades to come. You probably want a deal maker in charge. Look, I'm not big on politics. I just tend to be very centrist, but I just can't see the likes of Joe Biden or even Obama, well, possibly not even George Bush, to be honest, and prior to that, a previous Republican president, hustling as hard. They just didn't have that business background. They were more politicians. So not, as much, whatever you think of him, not the worst bloke probably to have in power while you're trying to hustle deals, for the next phase, well, industrial revolution style phase of a technology leap. So Oracle called a little bit as well. Meta came out with an announcement yesterday, which I think got very little attention, but I think is quite significant. They are releasing a pair of the in conjunction with Ray-Ban. I mean, they look, I've got to say, they don't look great, but of these smart glasses, which at the moment won't really be, they're not going to be a replacement for smartphones, but That's where they're positioning themselves. They do have a head-up display and a internal monitor within the glasses, and I can honestly see them starting to eat a big chunk of that smartphone market, because I mean, obviously it'd be very good for people who wear glasses, and people might still want a phone, but the thing about it is it runs on Android, so it doesn't run on Apple, and I don't think it's going to be good for iPhone overall, and that is obviously around 50% of their, or 50 to 55% of their revenue. And then anyone who's listened to the podcast previously knows I'm very skeptical on Apple. I know they've got an absolute ton of cash, but their lack of innovation and what I would call laziness over the last decade, just because of their incumbency, may come back to bite them pretty hard. I mean, we've had, when we saw what happened to BlackBerry all those years ago when the smartphone came out, I'm just extraordinarily surprised that, given what Apple did to BlackBerry, that they're not more conscious of this. There are rumours that they're going to do a foldable phone, but I think the Meta glasses thing, I would want Apple to be very definitely trying to do a deal with Zucks on that, because they lose that hardware, they lose those subscriptions, and and you get people drop out of the ecosystem, they're gone. So rest of the market wasn't particularly exciting. A little bit of strength in the banking sector just due to those the rate cut and the forward rate cuts. Jerome Powell played the straightest of straight bats yesterday. There was only one dissenter, Stephen Moran. He's Trump's guy. He wanted 50. We also had Bank of England overnight, as expected. They didn't move rates; they moved them last month. But yeah, so apart from that, there wasn't a huge amount. Jobs, weekly jobless claims actually corrected a little bit. Tesla, as you can see, was down there overnight. There was no major news, but it has been on a bit of a tear this week, I've got to say. And look, there is a fair bit more talk about robotics and automation, and no matter what people think of Elon Musk, Tesla is positioned by far to be, to have the lead there, and the self-driving cars is included in that. Yesterday, coincidentally, I didn't say, Australia it was the first day in Australia for supervised fully self-driving cars. So it's there's some of the Scandinavian countries doing it as well. It's really spreading quite fast in the US amongst the states. We're talking 1 to 2 trillion in annual market, total addressable market. I think Tesla is incredibly cheap here. There was also one of the agri companies in the US signed a heads of agreement with Tesla yesterday for 10,000 of the Optimus robots. So, look, I really do think any sort of pullback, I'd be happy to be dollar cost averaging there now, and just buying with momentum. It's even despite the fact that it's rallied 80-90% out of its lows in April. Loads of stocks have done that. Nvidia is nearly 100%. So, and they've had nothing but bad news for them. Normally they're just full of extraordinarily good news, but they've had a couple of setbacks, Nvidia, and the likes of Oracle, the likes of Intel, with the government taking the stake in them as well. I think you're probably getting a bit of a bargain because people really hating on Elon. So next week we've got a couple of decent earnings, but it's not particularly earnings season. Micron on the 23rd, it was up about 5% overnight. We like Micron. It's one of our global alpha. We're currently, we put it on about a week and a half ago to, looking at this earnings ahead. It's already gone through our price target, or our initial price target, which we've just raised. So we might look to potentially trim into the number, because I think we're up quite considerably there already. Costco is a massive one next week. You're going to get some insights into tariffs, into the consumer, all sorts of things. Just for those who watch Ausbiz, I've got Costco as part of the hybrid version of the call with Mark Morland next Thursday. So the earnings will be that night. But for those of you who want to get insight into 5 stocks, Mark Morland, very smart guy as well, and has some great insights. Check that out. Next week, not much on the calendar really. RBA governor speaks on Monday morning. A bunch of Fed speakers all through the week, not just the Monday. They just peppered all through the week. I just couldn't, there'd be too many little flags there if I tried to put down everyone's name. CPI in Australia as well, final GDP and core PCE on Thursday and Friday. This is obviously the second revision. This is the one that moves the market the least. Probably largely just ignore that, to be honest, unless there's a move in, a significant move in the PCE. But obviously the way that GDP works, it's a quarterly number. There's advanced GDP, which is the one that's quite volatile. There's, there's revised GDP, and then there's final GDP. So this is just the final revision of the quarterly number. Looking backwards, so it doesn't tend to move the market too much. Some manufacturing PMIs in Europe and the US as well. So yeah, there'll be a little bit going on next week. It'll be interesting to see if the market can hang in there after we've had quite an extraordinary run in September, which is seasonally very, statistically very unlikely. So it'll be interesting to see now that we've got these rate cuts, etc. A bunch of deals being done, and a void for for earnings for probably there'll be small bits and pieces here and there, but I don't really see where any more positive announcements are going to come out, and everyone's going to be focused on those labour market numbers, which will be or Friday 2 weeks, I would imagine, or maybe Friday week. So yeah, commodities. US dollar rallied about 0.4, which obviously dragged. I mean, silver and gold got belted yesterday. Gold's still pretty high, but for probably a pretty reasonable result, I suppose. There was fear of a 50 cut that sent those things higher earlier in the week, but obviously that's been sucked out of the market now. Coal, I think that move in coal is really just there's a shift in the futures, particularly, but we did see iron ore rally a little bit this week. So it's knocking on those highs there. Crude's up, uranium up as well. Obviously on that Department of Energy deal, our favourite in the space, Oklo, my lord, is up about 30 or 40% this week. New record highs. It's unbelievable. Smart modular reactors. I think we recommended that probably about 2 or 3 weeks ago. It'd nearly be up 50% by now. Quite incredible, but particularly for a company that's pre-revenue, but it's really positioned itself as in that small modular reactor for the data centers, and now that's the way that the US government's going to go. They are in pole position at the moment, so one of those ones that if we do get a pullback, it will likely fall back quite quickly because it's not making money, but I think you want to buy it on a long-term basis for sure. But as far as the Aussie goes today, I would expect us to open probably, the SPY's up about 0.6. I think we'll probably head a little bit higher unless, unless the usual parade of dour fund managers is too cowardly to buy it. And we should maybe, hopefully see a little bit of a move higher. I would imagine, whilst it's definitely more AI and tech based in the US, which doesn't necessarily come into our market, the rest of the world's pretty bullish as it stands at the moment, and we've got really strong technicals on it. So I would expect us to grind higher, maybe even get to about up 1% at some stage today. Yesterday we had Santos's deal fall through, and there was other energy names also posted some pretty heavy losses, and Endeavour edged down on leadership changes at its BWS. So nothing major to report there, but check out Kai Chen and Jonathan Takadena will be doing Bulls versus Bears, our weekly podcast for MPC today. I'm on the road, so make sure you check that out and subscribe to our Weekender, and hope everyone has a great week.